following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Oh, look who we have.
It's a beautiful thing. Get our man, Jim from Minneapolis. We're going to take him by storm.
Taking it by storm, baby.
I love that. That's a great saying, man. Hey, what's happening, brother?
Good morning, gentlemen. How you guys doing today?
Good, man. Yourself?
Oh, man. It's been the most incredible couple of days since when I called in on Friday, Litecoin busted out of that consolidation on the 2-hour chart.
Okay.
And it just never looked back. It did a 100-point ABC up, and now it's very extended the way I look at it. But
Yeah.
holy I mean, it went up to $420 last night.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's a TGIF, folks, and it's a St. Patrick's Day weekend. I don't know where that little leprechaun went, though. That little leprechaun didn't bring us any gold this year. We'll see. Day's not over yet. I guess bottom line, until tomorrow. Yesterday's gone. Tomorrow's not here. What are you doing right now? Market-wise, let's take a look at it out here. We have the Dow Industrials up 113. NASDAQ flat. S&P's up 2.5. Gold contract down $5.10, trading at $13.12 an ounce. Silver down 13 cents. $16.29 an ounce. Light sweet crude caught a bid up $109, $62.62 a barrel. Notes and bonds. You get the 10-year note down 5 ticks, 120.10. 30-year bond down 12 ticks, 144.14. King dollar up 114 ticks, trading at 89.795. The euro is trading at 122.85 to $1 US. Yen is out here at 106 to $1 US. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? We go over and we take a look at the SPY. Well, we're going to see out here coming into the close, too, folks. You're going to get some big volume coming into the close. We have quad witching out here today. Yeah, the S&Ps, futures on the S&Ps close out this morning. You're going to get all these options closing out at 4 o'clock. We're going to get a rebalancing. There's going to be some big action coming into this close. What we have out here on a daily, bottom line, you get a sideways move. S&Ps are up 70 cents, 274.60. Now, what you're going to see here is that we put this on a weekly, and what you're going to have here, more than likely, is that we're going to be inside the highs, which is the last high, 278.92. And bottom line is that we're going to be getting, we're actually inside of the bar from the February 9th time frame, and that's 275.85. And I do expect what we're going to see out here is that we're going to see expansion of volume as we're coming into the close. So that would give you an expansion of volume on the weekly on the way down also. Now, NASDAQ Composite. The Composite got inside its lower range this week. Lower range where we broke out from was 75.05. That sets up. NASDAQ wants to go after the March 2nd swing low. So that March 2nd swing low is 7,084. What is still wide open, which hasn't been tested, is the February 9th level. That's a big number. Excuse me, folks. Small caps. We take a look at the small caps out here. Russell 2000. Russell 2000 is trading 157.76. Bottom line is that now here's divergence. So Russell is up with volume. You know, this means that the Russell's not done. Right now, we get 24 million shares. You know, yesterday we came down 14 million. This is pushing the high and pushing it with volume. This is pretty intense, actually. Let me look at this. Yeah, this is saying the market's still not done. Pretty amazing. Yeah, this is going to be pushing actually into its swing high, and it's going to have volume. So the small caps basically is saying that 160, 862 is game to be tested again. Well, it actually hasn't got tested yet. We made it to 160.30 this week. 32 more cents. It wants to get up and into that level. Gold contract. What do we have with the gold contract? Where's that leprechaun today? Bottom line, that leprechaun is still sleeping, getting some rest for tomorrow, I guess. Bottom line, what we have is this. You're down 490. You're at 1312. You got down to 1309.50. You do have lighter volume. We have 270,000 contracts, which is light volume compared to what we're going into. We're going into 422 as well as 366. That being said, it would have been nice to get a rejection of price. And thus far, we really haven't got a rejection of price. We're close. You know, we'll see whether this can close into the 13.1340 mark, 13.1320 mark, actually. Yeah, 13.1320 before the close. You know, we're close, but bottom line is that we're not there yet. That being said, however, is that what we do have is that you have the equities, the gold equities. They rejected lower price, had lighter volume. That's on the daily and the weekly, which is pretty cool. So the GDX, we got down to a price point today of 21.25. We're trading 21.42. You got under the swing of 21.35. You're over it. Dramatically lighter volume, by the way. You did 14. You're doing 14 million versus 32 million. On the weekly, we put this on the weekly. What you're going to see on the weekly is that the weekly, you know, you're down on 111 million shares versus 176 versus 217 versus 326. The way that's set up is that is saying that there's no sellers inside of the gold equity market. Silver, let's go over to the silver market. Silver's down 0.7%, trading $16.30. Silver, 67,000 contracts. This thing has needed a bid for so long, it's incredible. Okay, so bottom line is it's dramatically lighter volume. We're going into 100,000 contracts. Did 67. Silver is at 1630. Silver needs to get above 1633. And where I'm gauging this from, folks, is the lows that were established on March 9th. You know, the range is lower. There's no doubt about that. But that range on February 9th, as well as March 1st, there were two spike lows, and they've recovered pretty quickly. So I'd really like to see it at a much higher price, and I'm being more conservative as to where I suspect that bottom of that trading range is. Notes and bonds. Let's go take a look at the note and bond market. What we have with the note and bond market is this. You have the 10-year note trading down 5 ticks. 120.10. Now, this is a nice setup still for higher price. Pretty dramatic, actually. We are pulling back today with 860,000 contracts versus 1.3 million contracts versus 1.6 million contracts. That's how you like to see that pull back. So that's telling me that, yes, the note and bond market still want higher price, lower yield. 30-year, same setup in the 30-year. 30-year out here, 144.13. Bottom line, did 185,000 contracts. You stay right there, folks. We'll be coming right back. We have the Dow Industrial up 101, Nasdaq flat, S&P's up 2. Coming right back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks!
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. The Dow Industrials right now are up 91. You get the Nasdaq down 1. S&P's up 1. Some of the higher volume stocks out here, folks. Taking a look at it, we have Micron Tech. That's catching a bid once again. That's up $1.60. You have Ford up 9 cents. Intel's up 44 cents. AK Steel is up 17. We got Walmart up 220. Let's go over and take a look at Walmart. Walmart's been getting smoked lately. Right now, Walmart is 89.71. Yeah, this is a dead cat bounce. There's not much here. Walmart is straight down from $109. You're at 89 right now. They're trading 109 on the January 29th. They get some problems. Well, Amazon is probably half their problem. Get over and we take a look at Amazon. Amazon is down $13 out here, $13.45. And we get a little expansion of volume on Amazon. So Amazon, let's see this intraday. Yeah, she's getting some selling pressure, you know. So what you are going to have at the close also out here, because we have the close of the quarter also, is that you're going to have a little rebalancing happening, and we'll see what that does to Amazon. Gold Bugs Index. So we got the Gold Bugs Index. So the Gold Bugs Index, folks, has been struggling. We are up 15 cents right now. That is not going to be enough. That keeps us outside the higher range, which is 174.19. If I put this on a weekly and take a look at it the weekly, it's not the end of the world, but bottom line is that I really like to get back inside that 174.19 area. When we got out of it, the week of February 9th, and it's been having a hard time getting back into it. Now, the lows of the XAUI are 161. That goes back to December of 2016. Gold, that's the Gold Bugs Index. XAU, different ball game. XAU trading out at a price point of 78.93. And when you take a look at this baby, that continues to basically do all right. I mean, it's way above or inside the higher range. You know, the higher range here is $76.39. You're trading 78.93. We put this on a weekly. What you're also going to see is that it's definitely in this higher range. So we'll see where that gets us into next week. Now, let's get into good old King Dollar. So King Dollar yesterday, folks, caught a bid. Today, what we have is that King Dollar is failing once again, which is just what King Dollar has done since January of 2017. We take a look at it. What you have out here is that King Dollar got over the highs of yesterday, as well as your swing point. Your swing point's 89,930. Now, if we close out here, it's going to be a failure once again. Not on volume though. There's good volume in here. So 89,930 is the number to keep your eye on as we come into the close. Right now, we're at 89,765. That's the swing point from the 9th of March. That wasn't where we actually failed. That was just a bottom line small counter trend bounce. Where we failed on price and volume was March 1st. March 1st got to a high of 90.490, closed out the day at 89,775. That's the consolidation that we've actually been in. When it was going up into this on March 1st, what we're actually doing is going into your downdraft from the 12th of January, and that was where the monster failure came in. It took out a swing point on a monthly basis. That's your much larger ABC structure down inside of the dollar index. Let's go over and take a look at the XLF. XLF out here is trading at a price point up 9 cents. What you have is that bottom line is that this is 37 million shares. Now, what's intriguing about this is that the banks, they got a ruling out here today that basically could save them a huge amount of money. The amazing part about it is that it's pretty amazing that here. So let's go over this for a second. So Morgan Stanley and Principal Financial Group were among banks and insurers that rallied after the U.S. Appeals Court struck down a sweeping Obama-era rule that aimed to protect millions of Americans from conflicted investment advice. The rule, which was imposed by the Labor Department, would have added extra layers of scrutiny for the industry and increased compliance costs. The U.S. Court of Appeals for the 5th District of New Orleans said the rule bears hallmarks of unreasonableness, and the decision released late Thursday could increase the likelihood of a longer legal battle that could reach as far as the U.S. Supreme Court. Now, the thing that is pretty amazing about this, folks, is this. So the way that the broker-dealer business works is that you have broker-dealers, and then you have brokers, and then you have financial advisors. Now, and then you have financial advisors that are CFPs. A CFP is certified financial CFP. I don't know what the P stands for. Bottom line is that they're certified. This is what the difference is. A CFP absolutely has to have your best interest at all times. Planner, CFP. Thank you, Danny. Has to have your best interest at all times when they're selling you something. A broker does not. So it amazes me that, number one, the banks keep fighting this, and that actually folks, all of us, don't really understand what the difference is, and they keep getting away with this. Because if you're in the financial business, it blows my mind. And where this comes into play is this, is all the big banks have their own products. If you're a broker, they can tell you flat out you're going to sell this product versus this product. If you're working for a big broker, a bank, and your CFP, they can't do that. So what that rule is about is that rule was that inside your 401k, that they absolutely could not sell you a fund, because there's many times there's two funds that are exact same fund. One has more fees that's sponsored by the bank. One doesn't. Bottom line, they try to sell you the one that the broker would make more money versus the other one. And this is going to be a war that's going to continue, I think. This is just about education, folks. That's the real bottom line. It's getting educated as to, okay, what am I buying? And the amazing part of me is that they are right out front saying that no, they want to be able to sell you something that costs you more money. Now, the amazing part, when we actually look at they're claiming that it's going to cost them so much more money on compliance. It's not going to cost them that much more money on compliance. The bottom line, they didn't make a rule. The rule is that you can't sell the product, okay, unless it's the best product out there, period. End of story. But guess what? The battle's going to be out there. Now, my point is that didn't even save them out here today. So let's go back and look at Morgan Stanley for a second. Morgan Stanley, MS, because the whole sector, you can see the sector really didn't, the sector gave it up. So Morgan Stanley's up 52 cents. Yeah, that didn't catch a bid either. So that's where a news item that they're catching bids versus that didn't catch a bid. Let's go over to the XLE. We had oil move in a big way out here today. Hasn't really helped the XLE. XLE right now up 62 cents. You get 10 million shares traded, light volume. Yesterday we come down to 12 million, going up in 10. That's on the daily. We put this on a weekly. And you're still building cars to get out and go after this high volume low. February 9th, it's a monster. $64.45. That is one big number that looks like we're going to go after. You stay right there, folks. We got our man, Mr. David White, coming up. We're going to be talking technology. And, of course, the last 30 minutes in trading. What do we got? We got some volatility coming in the market. You got a rebalancing coming in the market. You got all of it. Dow Industrials right now up 93. NASDAQ is down 1. S&Ps are up 1.5. We're coming right back.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earn me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We have the Dow Industrials up 117. NASDAQ is up 4. S&Ps are up 4.5. Let's go over to our man, Mr. Dave White, as we do each and every Friday at half hour past the first hour. Don't forget, folks, Dave's got a great program every trading day right here, 2 to 3 Eastern Standard Time. Also has 2 great newsletters. He has the Tech Insider, which is his weekly newsletter, as well as the Path of Least Resistance, which is his daily newsletter. In both cases, you can get them 30-day money-back guarantee coming over to our website at TFNN. Just go to newsletters. You can pick either trading or investment or both. Dave White, what's going on?
Well, a little bit of white lightning and wishing for the days of the OEX trade to come back.
Yeah. I'll tell you, I'm sitting here. I'm doing the same thing, man. I love what this S&P is doing right now. I'm trying to figure this out. Do you know what I mean?
Yeah. Again, it may take a little while, but this kind of went away with QE 1 and 2 and 3. It kind of faded out and we didn't have that much action on Fridays, especially triple or quad witching. But I suspect that we're going to start to get a lot more with the bonds being withdrawn on a monthly basis now, whatever it's going to be, $20 or $30 billion. We're going to get back to kind of the market having no put under it and probably starting to see a little bit more volatility, especially in these option expiration days. So looking forward to that.
Yeah.
Anyway, I wanted to talk a little bit because there were a lot of articles out today that I thought either missed the point or were wrong in the last few days.
Okay.
And the first one was a bunch of articles out about Bitcoin not being profitable to actually mine anymore. And these articles, I think, missed a great deal about what's going on. And the other thing is I see all the people keep on telling me how much money AMD makes for crypto mining. And I keep on thinking that and keep saying it, and it doesn't seem to register anybody. But every time these guys have earnings calls, they say that isn't a big part of their business. They say it's less than 5%. Everybody wants to make, and then I hear from the Bitcoin guys, and it sounds like it's 50% of their business. Everybody's doing it everywhere. Anyway, a lot of articles about the economics, and now that Bitcoin's kind of come back in half, a lot of people added capability to mine Bitcoins. And now that it's dropped below $10,000 fairly significantly, they're saying it just doesn't make sense for these guys to even break even on the cost of electricity. But then these guys really start saying, well, you know, the biggest and best place to do it now is in Louisiana, in New Orleans. And I'm thinking, okay, they don't really, these guys writing the articles don't know anything about Bitcoin mining because the biggest part is electricity. That is two parts. One, cooling things, and the other thing is paying for the electric. It doesn't make it any better if you have to pay a lot of money for air conditioning, but you have lower electricity costs. You're much better going up to the top end of Canada next to a hydroelectric power plant where it's about 5 cents a kilowatt hour, or up in the Nordic regions. You know, half your expense is going to be cooling. And if you can just open the doors,
you know, what's interesting what you're talking about, Dave, is that just today you can see Bitcoin mining got outlawed today in Plattsburgh. It's a small, town upstate New York, right next to the Canadian border, and that's because the electricity is so inexpensive from the Lawrence River. But what has happened is that they use up their allocation.
Yeah.
So it's like pretty intense.
So the whole thing has always been a little bit weird to me. And when I put my aluminum foil hat on, I've always thought that Bitcoin was just a giant scam by the CIA to have people go out there and make a rainbow table. Rainbow table is a way of going out there and figuring out the hash function of all particular numbers. And if you get all those, then you can instantly break any kind of code once you figure out the hash of that code. So the whole idea would be, instead of us do a lot of stuff, we're going to make this currency. We're going to get everybody to use all their computer power that they can to give us every hash for every possible code that there is out there. And then when we run into one, we can just look it up instantly.
So let me ask you, I mean, when we're talking about this, does a Bitcoin, just to mine a Bitcoin, like cost in the vicinity of like $5,000?
No.
Okay.
It varies. And in fact, at one point, or in fact now, you only get half the Bitcoins that you got for mining the same amount of Bitcoin just a year ago. So
right, no, that's how it's supposed to work. I understand it. There's only 22 million Bitcoins supposedly, so everyone's going to get harder to mine. I was just wondering if we knew what about what the price was, you know.
Right now, well, they're thinking it takes $9,000 to mine a Bitcoin now.
That's what I meant. Yeah, so that's intense, man.
Yeah, so it is problematic. And if your electricity bill is $7,000, then you make $2,000. But if it's $10,000, you don't make anything. You lost $1,000.
Right.
And all these people in the last 6 months really piled on, and that's been the history of Bitcoin, is going from where it didn't make any money to where it did make money, and then everybody piles in, and it doesn't make money anymore. So it's almost like mining a commodity, like gold or anything else. And it's the economics of doing that. But again, there's a few other things that we were talking about. I think you brought it up the other day on your show. I was talking about how many companies all wanted to become gold miners back in 2002. And it's the same thing, but Overstock.com is the poster child for this. I think someone called in and asked me what I thought of the company. And I said at the time, I don't like companies that change the stated purpose and really don't tell you how they're going to make money when they do. Overstock.com went from $41 to $89.80, all on this idea that it was going to be that Bitcoin somehow was going to magically change the company.
Look at that chart, man. That's intense.
No one ever explained why that was going to change the profitability of the company. They're just doing Bitcoin. And so it always makes me think of those gold companies in 2002 that suddenly had all those park stocks that did nothing, and suddenly they had gold in the title. We've seen the same thing with Bitcoin in the title. I think the first question should be out of the mind or out of the mouth of anyone that's a trader is to let you know whether or not this is a scam or not, is fundamentally how does this change the business these guys are doing, or is it just like the little stickers that everything is on everything these days, like 10% less fat on something that had no fat to begin with? Or, you always see these little marketing things, but does it really matter?
Yeah, well, I have Overstock up right now, and it is interesting because today they came out. Overstock didn't disappoint crowd of short sellers who bet against the retailer. The shares plunged 16%, after the company said that previously disclosed U.S. Security and Exchange Commission probe may hurt business and push back its initial coin offerings. Their deal is that they wanted to do those tokens, right?
Yep.
Yes. Stay right there, folks. Dave and I are coming right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien.
Welcome back, folks. Dow right now is up 118. Nasdaq is up 2. S&Ps are up 4.5. We got our man, Mr. Dave White. We are talking markets. We're talking technology. And this one is pretty intense, man. This one, we're looking at DNA trouble, true or not. So talk to me about this slide, Dave.
Okay. This is like I said, a lot of these articles seem like they're being put out in a big hurry and there's not a lot of thought going into them. But kind of a press release was a little ambiguous from NASA. But basically, it comes out and says that there were two brothers that one was left on Earth, the other one was put in space for 345 days, and then they were going to come basically check and see all the differences between these two twin men after the time. So here comes the article, and it says that 93% of the DNA returned to normal after returning to Earth, and 7% actually of his DNA changed. Well, none of that's true. So that went around for about 2 days to everybody figured out truly the change. It's still interesting, but there's a lot of...
So here, you're saying that NASA put this out and it's not true?
NASA said something that's ambiguous. Some newspapers picked it up and ran with this headline, which is not true. But it is very interesting about what actually did happen. The DNA did not change. What happened was whether or not proteins and various things that get expressed because of those DNA, because of the DNA, actually got expressed. And this is going to lead probably to a lot of cures in the future. But a lot of people say, hey, my immune system just isn't doing what it should, like it should have before, right?
Okay.
That's exactly what happened. The DNA didn't change, but the ability to express proteins that actually end up being hormones that cause things like your immune system to actually catch up did rapidly change. And 93% of his DNA returned to normal, but 7% still never did, only in the expression of those things. It's still the same. It's just things quit working after being up at 340 days.
Oh, cool. I see what you're saying. So the express means working, it stayed the same, but yet it wasn't basically performing, right?
Correct. Or some things, actually some things turned on.
Okay.
And there were some hormones that turned on and some that just turned off after time. And of course, as the control group, they had one guy that was...
Man, that's a long time in space.
Well, he spent a long time in space. He's pretty much gotten back to normal, but things like bone density, that's generally the number one thing that happens is you can lose 50% of your bones in a year in space.
Really?
Yeah, and that is, you know, they were their daily schedule on the space station is to work out 2 hours a day.
Okay.
Just to keep some muscle mass. And again, we talk about going to Mars. literally the people, even if they exercise 2 hours a day, by the time they got there in 9 months and they got into any gravity on Mars, wouldn't be able to move.
Wow.
Even if they exercised in space. So the whole thing about losing bone density and muscle mass is all part of that. What happens, why you're in weightlessness, and what changes in how these expressions. Now, the important thing is people that have had things like chemotherapy that have destroyed their immune system, well, that DNA is still there. What if you could just figure out a way to jumpstart it and get it started again? Same thing.
I see. Okay.
Same thing with cells, like rebuilding cells for kidney or liver. This may open up a lot of medical stuff, but if you just read this, it would sound like, you know, when he landed, we had a guy with 3 eyes and he was a total alien, you know, if he would have spent 5 years up there. And it's not quite true, but a lot of articles this week seem to not, you know, really go fairly deep. And as soon as they're published, everybody starts tearing them apart and finds out that, maybe those headlines weren't anywhere close to what the headline said, but maybe they're still interesting, a lot of stuff that can happen. So it was very interesting to me the way it was reported and what actually the truth was. And, of course, this was out for about 2 days before NASA corrects it. But, again, those corrections always seem to be on page 6. Headlines like this tend to be on page 1, right?
Sure.
California is getting into the Right to Repair Act, and other people will probably, or other states will probably follow along. The question is, and I didn't know what you thought about this, but you know, you basically drop an iPhone that's worth $1,000 or $1,200, and it's pretty easy to destroy the thing. Maybe you've got insurance on it. A lot of people don't have $1,200 phones, but may have $500 or $400 or $300. But they're basically throwaway devices now. They're sealed. You can't get to the batteries. You can't replace the screens. I mean, in their effort to manufacture these things as thin as possible, maybe if it was just a tiny bit thicker, you could repair the thing. Well, California's going to basically say, you know, we're not just going to, if these things crack a screen, you're not going to be able to just throw these things in the landfill. That you're going to, as a manufacturer, you're going to have to say that you at least meet minimum levels of repairability. And, you know, just not throwing it back into a landfill somewhere. And,
well, that, you know, I bring that somewhere else. I mean, I think it'd be great if, you know, I don't think there's too many of us that can make a product, sell it for $1,000, lock it up so that other repair shops or people can't make money on repairing it. That'd be like selling a car and sealing it up and say, that's it. Once it's done, right? So, I mean.
Right. And, of course, Apple makes the comment, and it's probably a little bit true. If someone goes in there and starts tearing on it and then expects it to be waterproof, is it still waterproof after these guys are working on it? But I'm thinking
but that, you know what that'd be like? That's cool. That's all right. Just, you know, they get a warranty on the phone. The warranty's the warranty. After the warranty, just like a car. Good luck, man. You know, you're going to a deal. You're going to someplace to fix it up.
Yeah, I think the car thing's probably a little bit more apropos. If you go hit a tree with the car, you fix the car, and then you go back in and ask for warranty. A lot of times they'll probably say, "Hey, you took this car and hit a tree with it. You know, we're not covering this or that or the other."
Right. I wouldn't expect them to. Right.
Yeah, you wouldn't expect them to. But I guess my thought is that this is just not going to apply to phones, although this is kind of where this thing is targeted out. Literally, it would be anything electronic, including things like computers in your car, that now you just have to swap out, that the manufacturers would have to give enough information that people could send, you know, I think I replaced one that was like $1,000 or $1,200 in one of my cars.
Well, that'd be a big business, man. That, you know,
would be a big business.
That'd be a big business.
But also a huge cost savings, right?
Right.
For consumers.
For us,
This is a big thing that's kind of moving through. The big thing is just how much money Apple makes on replacing things like batteries.
Oh, they're going to fight. Listen, man, any big manufacturer is going to fight that, you know, because this does come right back to our cars, because it's a mind blower that some little piece could be so expensive and you know, like you probably know how to fix it. You know what I mean? You plug it in, you put it back in. Where you know, most everyone on the street is like, oh man, we're they have us by the throat. Do you know what I mean?
Yeah.
Right?
Okay.
Stay right there, folks. Dave and I come right back. Now listen, you can go over and get either the Tech Insider, the Path of Least Resistance, right now website. Go to TFNN.com, hit newsletters. Dave and I come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow's up 120, Nasdaq's up 11, S&Ps are up 6. We got our man, Mr. Dave White, and Blue Apron. So they're trying to survive, aren't they, Dave?
They are, and the question is, you know, at one point, does Amazon just literally take all our jobs? You can't. You might not be able to do anything. That's probably a gross exaggeration, but I mean, it's very tough to see literally any business come online that they can't do a lot to put out of business almost instantly. The question is whether or not, you know, if you went to some store like Target or Walmart or Publix, whether or not you would want to buy these meal kits when they already have the other stuff already in the store. Have you ever done the Blue Apron thing or any of these others?
But, you know, I'm looking at, folks, Blue Apron went public less than a year ago, June 28th at $10. It's trading at $2.15. And, you know, even when they went public, they had to get that out because that's what Amazon was getting in the food business. I mean, they don't have anything that Amazon or Publix or anyone else cannot do, you know?
Yeah. That's always the question is there a moat around your business? And they had no moat.
Yeah,
and
intense.
Just a big company being able to have distribution and everything already signed up. But it's kind of interesting to see, we see this in things like Snap and Facebook. The big incumbent position, very hard to defeat. Even Blue Apron to be doing well for a year and then, go public and then find it's fairly easy for just some big company to duplicate exactly what you do.
Well, it's amazing when we actually look back, right? When the last deal, let's say in the 2000s, it was Microsoft that everyone else, they got in everyone else's business, right? Do you know what I mean? It was like they just eat you alive, and they'd go slow, but guess what? You come out with a business they liked, guess what? Inside the spreadsheets, right? I mean, pretty amazing. Yeah. Wow. Listen, folks, Dave, thank you so much, man. Have a great one, a safe one. Folks, have a great St. Patrick's Day, a safe St. Patrick's Day. Look forward to speaking right back here, Monday morning, 8 o'clock. Go get them, folks.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.